Okay. Okay, one moment, please. Okay, ladies and gentlemen, today's summary is of today. What happened was a little bit of a mixed bag. Sort of flattish, not really that much movement. But I guess the NASDAQ was above, the negative 0.03%. Dow Jones and S&P 500 basically the same 0.03. So not much movement today. You can see it here on the VIX, which is usually more than 2% usually. Oh, sorry, more than this certain amount of pointage. But it went down negative 5.24%. For tomorrow, also looks like it's a mixed bag. Flat for the NASDAQ, Dow Jones, also flat. Basically everything flat, no really decision yet, but looks like a mixed bag at least. Oil slightly up and US Treasury slightly up. Okay, let's do the top 5. Oh, why did it log me out? Okay. Top 5 winners, top 5 losers, and call it a day. So coin was the winner, close to 7%. You can see here on the 15-minute chart. It basically did most of it before the market opening. So basically, if you got it on Friday, it went closely up to from 240 to 260, so $20. And basically kind of stay flat throughout the day. So basically the movement was over the weekend. So if you have coin, it's systems go. And you can see here, based on from February, it has been making lower highs, lower highs, lower highs. Yes, it went down, but I believe it's still going to keep on going. Macy's, close to 5%, slightly above 5%. Basically has been going down of a trend, but picked up somehow this morning. And it was, wow, this one would have been a great long. Amazing, because any dip that you would have gone it, you would have done amazing. Not sure why this went up so much today, but it certainly was the winner. Tesla, they had some news from Elon Musk regarding some robo taxis. So this is why I think this thing picked up, because for the most part, the EVs have been not doing fabulous, but you can see picked up basically right at the open. It just went it like the news about the robo taxis, but overall the trend is weak. And I feel like it's still it has long ways to go to get back to that 250. I think it's gonna go up before I think it's gonna go down before it goes up. And I have a video tomorrow for more evidence of this. Piton, close to 3.50%. And it a little pick me up. So I think it's due. If this continues, this trend for the next 3 days, I say you get it around 450. That's the way to go on this, because that's what it usually does. If you look at here, it usually picks up for 3 to 4 days and then it starts going down. So I think it's going to do the same thing. And if you can get it at, like I said, 450, 448 and above, that's the ticket. So just let it go up and you should be fine. Rivian went up to 3%. Again, the EVs have been doing that great overall. And you can see it's been flatlined around here, around this 1030 mark line. This went up because Tesla went up. So it's basically, if you transpose this and Tesla, it's probably the same thing. Again, I wouldn't go long on this. And you can see the evidence that is on hard buy. So that tells you all you need to know. Let's look at Google before we look at the losers. Google has been in a fantastic trajectory up. AI still going. with this. And that's the narrative. So basically, it's still at all-time highs. The question is, will it get to 160? Yes, the answer is yes. No stopping this channel. There's no evidence that is going down. So just buy the dips and keep it moving. Let's look at the losers of the day. DraftKings, I'm surprised, but not, I guess, not overly surprised because March Madness is over. You know, it did fantastical. Probably people a lot of betting over the weekend. Maybe people lost or won a lot of money, and this is the reason that this went down so much because um, people
lost a lot of money.
People lost, or you know. So here you go. Here's the trend. People went down. It went down. But overall, it's in itself, it's not doing too bad. It was worse before, obviously. And it's slightly close to that 50 period. So you have to be careful. If it breaks that 50 period, I think that's when it's gonna, you know, start trending down or so. But it's still maintaining itself. It's still maintaining itself. And you have this level here that if it breaks, it could go up. So maybe, you know, this is the level of resistance is $50. So, and I think it, you know, went down. So yeah, be careful. If it pops up, you may consider shorting it because March Madness is over. Uber, not sure why this went down, but boom, there it is at $75. It likes this range from 80 to 75. It is slightly below, it closed below the 50, or is it the 200? Hold on. Yes, it closed below the 50. So that's something to take note of. It had consolidated here in the 80 period line. It's still high up there, I believe. So maybe that's why maybe people are starting to get their money. And it's gonna fill this gap. So maybe from 75 to 70, it will be a great short. Intel, this has been beating up along with NVIDIA, which is what we want. So here you go. Here's the evidence. So Leanna, I don't know if you want to get some of this. We said if it broke, if it got below 40, that was kind of the area. There's an area here of support, which is where it's at. So people who were interested in this may consider buying it, but I would wait because it might continue to go a little bit further, even maybe here to this area because the chips are now weak. But it, like I said, it could be a buying opportunity as well. Meta, META, the runaway train is on its track again. So here you go. Even though it was so-called a down day, it's still higher levels than before, and it's very expensive. 1 second. So here you go. Even though it was a down day, it's slightly up. No stopping Meta. Let me see. I'll just go over Softy and Apple and call it a day. So let's see. Here's Softy. Really didn't do that much overall. It kind of stayed flat. You can even see it here on the daily. It was very not a lot of movement. It just, you know, I would have said it was a long, because if you got it here and then you sold it at the end of the day, great. But it looked like it didn't move that much. Oh, sorry, I'm looking at the wrong date. So here it is. It basically stayed around VWAP. Amazon. It picked up before the market, and the high of the day, I guess, was 188, went down. So basically, if you got it at the beginning of the day and shorted it, you would have done fine. But it's still is considered slightly above, you know, 21% from the prior close. So that's why. But to me, it was basically a short most of the day. Okay, and last but not least, we'll take a look at Mansana. Let me just put this in alphabetical order. Here's Mansana. I was gonna jump into this, but I didn't. And I'm kind of glad I did because it was sort of flattish. You would have made some money at the beginning of the day if you would have gotten that 168 level or so. 168 level, and picked back up. But then the rest of the day, it was very negative, short. And you can see this IT stock is not doing well. Will it break this level here? That's the question. Every day has been answering that question, and it looks like the answer is yes. But until it breaks it, we can't say it has. But that's what it's looking like. Every single day, this stock has been going down. Will it go down tomorrow? I think so, and especially tomorrow on a Tuesday. So yeah, be careful with this, but you also keep the back of your mind that it would be a good buying opportunity at some point, especially here at 150 or so if it gets down there. But in the meantime, be careful and don't get too many shares. We jumped into Boeing real quick, traded this. It has some bad news, and we think it's gonna break this level. So I think it's gonna continue to go down. Actually, it's probably good to get it jumping again tomorrow because it looks like it's a breakdown from here. And tomorrow will probably be a great day because it's Tuesday. And that's all I got. Not too much. Wanted to keep it short and sweet. And if you have any questions, let me know. I did have this video that I wanted to share, which was 14 minutes, but we can do it tomorrow with the permission of Miss Green. And I think she would like it. It's regarding EVs, hybrids, why people are buying hybrids instead of EVs. And it was here, I think Diamond Dave, let's see if it's here, videos. He posted it. Now I can't find it. Let me see in the all.
I love that WWF logo.
Let me see if I can find it.
What are you looking for?
He did a post where he had, I can find it. Is the CNBC hybrid versus EV. Okay, this is the video that, if with permission from Miss Green, we could watch tomorrow. It's 14 minutes after she does her run. Huh?
Let's watch it tonight. I saw this video too, and it's I didn't want to play it because I thought it would be a dead horse. But
yes, but we don't have to, but maybe the viewers can do it in their discretion. And because we said we would just,
I thought in my mind, I thought we had beat this to death. That's the only reason why I didn't.
No, it's okay. I think the viewers can watch it in their discretion, and
no,
we just want to
watch it. It's we're finished anyway, so we'll just let that be the last 15 minutes.
I thought you said you wanted to be a short thing.
Yes, it is going to be short. I'm not watching it. I'm just going to let you play it.
Can you hear this?
Of course I can hear. Why can't?
Okay, no, just checking.
Oh, I don't hear anything now.
You don't hear it?
No.
Okay, that was my question.
When it came to
Can you hear it now?
At the turn of the
I'm good.
Okay.
Millennium, the hybrid car was considered a revolutionary step toward a less polluted future. It wasn't exactly exotic or luxe, but Hollywood celebrities loved its green image, while ordinary cash-strapped consumers adored its exceptional fuel economy at a time when gasoline prices were on their way to record highs. But since then, EVs have stolen the spotlight.
All electric with electric vehicles.
The Tesla Model Y becoming the best-selling vehicle in California.
While EVs stole the show, the company once lauded for bringing hybrids to the mainstream received extensive criticism from environmental groups for being slow to adopt EVs and for lobbying against tougher climate legislation. But EV sales have slowed in the US, going from selling in just 25 days at the beginning of 2023 to 72 days just over a year later. Meanwhile, hybrids are flying off lots, faster than even plain internal combustion cars, and winning awards. Hybrid sales grew 5 times faster than EVs in February 2024.
Automakers are finally reading the room. They're realizing that they still have to sell cars right now, not in the future, and this is what people want to buy.
Automakers, including some that had made bold commitments to go all electric, are now pulling back on EV manufacturing in favor of them. But hybrids aren't as effective as EVs at reducing greenhouse gases. Defenders say they are a solid short-term solution. Automakers, including some that had made bold commitments to go all electric, are now pulling back on EV manufacturing in favor of hybrids. EV sales in the US had a banner year in 2023. A record 1.2 million units were sold. Their market share is growing, and yet the oft-reported slowdown is real. Data shows sales growth is leveling off. One of the reasons legacy manufacturers are seeing an EV sales slowdown has been Tesla's aggressive price cuts throughout 2023. But legacy automakers are still selling lots of hybrids, especially standard ones without a plug.
You get a hybrid off of the truck at a dealership, a lot of times that vehicle already has a customer. So it's not even a point of it actually having to sell.
Comparing January 2023 and February 2024 data show that hybrids continue to sell much better than both internal combustion vehicles and EVs. Look no further than the company that brought the hybrid to the mainstream more than 2 decades ago, Toyota. Pro-EV and environmental groups say the world's largest automaker has been lobbying to slow the EV revolution it missed out on. Though it has experimented with battery electric vehicles before, the company has long argued that the bridge to full electrification will be a long one, and that most consumers aren't ready for fully electric vehicles. That said, it did in 2021 unveil plans to release 30 EV models by 2030, with an annual sales target of 3.5 million. In January 2023, Toyota faced its first shareholder proposal in 2 decades. Investors insisted the company do more to combat climate change and challenged the reappointment of Chairman and CEO Akio Toyoda. The proposal was defeated, and Toyoda kept his board seat, but he did step down from his role as CEO. As of early 2024, Toyota has only 2 EVs, and neither sell in large volumes. But in 2023, sales of its hybrids and plug-ins increased nearly 28% over the previous year. They make up about 30% of the Japanese behemoth's portfolio.
Nothing has really changed within the Toyota framework of product planning. Let me explain why. We have continued to say this very, very succinctly. A year ago, we were being mocked for it. Today, we're being congratulated for it. We're not swayed by either one.
Toyota's American rival and sometimes partner, Ford, has been selling EVs for longer and in larger volumes. Sales of its acclaimed Mustang Mach-E and the F-150 Lightning climbed nearly 18% in 2023 compared to the previous year. Hybrids still outpaced that, jumping by more than a quarter. Ford CEO Jim Farley said the automaker would postpone about $12 billion in planned EV investment and pull back on production of the electric F-150 pickup in favor of a hybrid version.
Success is a part of why everyone else maybe wants to jump back in, because they're seeing these brands have success with these vehicles, seeing so much demand. And not only are they selling fast, they're selling at MSRP in many cases.
While Toyota may have pioneered the mainstream hybrid, General Motors brought the plug-in hybrid to America in the form of the now discontinued Chevrolet Volt.
From an EV perspective, we also see this is our year to really execute and see growth there. So it's a strong performance in 23. I'm really proud of the team.
But in early 2024, the company said it will reintroduce plug-in hybrids to its North American lineup.
You look at their core buyer base, a lot of these people, infrastructure is not built out in places where they are living. If they have folks that are coming back to dealerships with their old General Motor brand vehicles, it's going to be a much easier sell to get these people into hybrids than it is to get them into EVs.
Basta.
Automakers are under great pressure to meet continually tightening federal fuel economy standards. A single company's fleet has to hit an average target of 58 miles per gallon by 2032. That is 18% higher than the current rule of 49 miles by 2026. The EPA also issued standards in March 2024 that call for 35 to 56% of cars to be full EVs by 2032. With U.S. household costs rising across the board and gasoline prices at $3.50 per gallon on average, hybrid vehicles offer a sweet spot for many. ICE vehicles are losing market share, but EV sales are flattening. The market is running out of early adopters, and many say these vehicles aren't ready for the mainstream.
Basically, in the last 10 years, we've gone from 0% of the industry to 8%. So we're about a 10-year period of time. The government's regulations to say, okay, we've gone from 0 to 8% in 10 years, but now in the next 8 years, we're going to grow by 60%. Not grow by 60%, we're going to take that number from 8% to 67%. People are saying, wait, I don't know who's all going to buy those.
Right now, as we move towards mass market, those folks are a lot harder to sell to. They're a lot more price conscious, a lot more product conscious. They have a lot more questions in general. And I think that's going to really plague the EV adoption rate for quite some time. And that was always going to be the case.
On average, EVs were the most expensive powertrain you could buy in early 2024. Plug-in hybrids were almost as pricey. Standard hybrids were cheaper than everything, including ICE vehicles.
I think right now in this country, we are in an affordability crisis amongst many industries, but I think autos being a big one. Because if we look at how people have afforded vehicles in the past, it's been because of low interest rates. And now that is not the case. The average interest rate on a new vehicle loan is over 7%. Used, it's over 11%. So when we look at what we can afford, it probably is less than what we afforded in the past.
It's a tough pill to swallow to say I can buy a ICE vehicle or even a hybrid vehicle at, let's say, $700 a month and a BEV at $900 or $1,000. That's a significant bump.
EVs have strong selling points. They are simpler and cheaper to maintain, and the cost of charging is a lot less than refueling in parts of the country where gas prices are higher. But there are stubborn obstacles, still relatively long charging times, and a lack of public charging infrastructure.
But a lot of folks say, I just don't want the hassle of owning an EV. Like, my life is already complicated enough. I don't need to go learn a whole new system of doing things to just drive and go places that I want to go.
It's easy to put on a piece of paper, hey, I spent X amount of gas, I'm going to spend X amount of electricity. Great, I'm going to be ahead of the game in 18 months in terms of cost. But a convenience factor is priceless. This idea that I might run my family 4 states away for a vacation once a year, I don't want to take 3 days to get there. That convenience factor might completely take that consumer 100% out of the BEV market. And it can't be quantified.
83% of EV charging occurs at home, but JD Power data shows that 1 in 3 car shoppers don't have a home charger nor the ability to install one. The firm runs a mix of studies on electric vehicles, including a year-round public charging survey of 30,000 consumers in all 50 states and D.C. The most common reason people decide not to buy an EV is the lack of public charging. EV owners say public charging issues are the least satisfying aspect of the ownership experience. Nearly 20% of the time drivers visit a public charger, they aren't able to charge. Most of the time, that is because chargers are failing or malfunctioning. But the number of times a station is unavailable or the wait is too long has doubled from 10% to 20% of failures in just 2 years. While EV adoption has hit some speed bumps, no one expects demand to fall or even remain flat forever. Globally, EV production is expected to double from 13 million in 2024 to 35 million in 2031, while hybrids are only expected to climb from 13 to 15 million. In the US, EVs will see staggering growth in the coming decade.
We're still very bullish on electric vehicles and where the market is going to go. You look at the investments that have been made in vehicle electrification by the manufacturers. I think that speaks loudly in terms of where the manufacturers think the market is going to go.
An important distinction: standard hybrids are really just more efficient gas cars, supplemented with a battery and electric motor that extends the vehicle's fuel economy. This is what the original Prius was and what many hybrids are today. Plug-in hybrids have a charging port, battery, and at least one electric motor. Some of them can, in theory, be run without gasoline at all, like an EV. The engine acts as a range extender. In others, the engine and electric motor work together.
With a plug-in hybrid or a hybrid, you get to largely avoid that public charging scenario. You're eliminating what is the worst aspect of owning an electric vehicle.
There has been a slight increase in the number of models available compared with standard hybrids since 2019. Still, though, they are the smallest category of cars in terms of market share, and they aren't especially cheap. On average, they cost nearly as much as an EV. They also don't offer a lot of the benefits of a full EV. You still have to get oil changes and maintain the internal combustion powertrain, and you have to buy gas. When driven on battery power alone, plug-in hybrids have just a fraction of the range found on a full EV.
In essence, what you're doing is you're taking two different product technologies, combining into one, but it's not serving either category all that well.
In other words, it might be the worst of both worlds, but it does provide the convenience of being able to rely on electric power for daily driving, but having the gas as backup when needed. The EPA electric range on the Prius Prime plug-in is 44 miles. The average American drives about 37 miles.
That's why you're seeing in the news from a lot of the competitors, you are seeing everyone starting to discuss it. But they're not discussing it as a bridge strategy. You're hearing them saying this is maybe the best valued strategy. I want to make sure we're clear. You're seeing a lot of momentum around plug-in because of what has been learned about the rejection of EV.
Another issue with plug-in hybrids is that they can be driven entirely on gasoline. A 2022 study from the International Council on Clean Transportation, a group that studies alternative powertrains, found that plug-ins might be driving on electric mode 26% to 56% less than one might assume from EPA labeling, and real-world fuel consumption may be 42% to 67% higher. The study did note that at the time the sample size was small and more data were needed.
Plug-in hybrids are great if you plug them in, as we talked about. Not everyone plugs them in, so the theoretical efficiency is higher than the practical one.
JD Power has found that plug-in hybrid owners are charging their vehicles pretty consistently, about 5 times a week on average, and they're using that electric range, about 70% of it per day. Despite concerns, some believe they may be the best available option for moving the needle closer to EVs.
You have to convince a consumer that a plug is not a disruptor to their life. And the way you do it is you introduce it to them in a little piece, not an all-you-can-eat concept.
Gil Tal, a professor at UC Davis, sees it somewhat differently. Plug-ins were originally conceived as a bridge technology, a temporary compromise that would obsolesce as EVs improved. While they certainly can serve that purpose, they may stick around a lot longer, at least for that last 20 or 30% of the market that is unable to make the full leap to battery technology. California, which plans to ban the sale of internal combustion engines by 2035, is still allowing 20% of all new cars sold after that point to be plug-in hybrids.
For a very short while, we were all thinking that a full electric BEV, battery electric vehicle, are going to get us to 100% or the full transition. I think we are learning to appreciate that it's going to be hard. So as long as we are thinking about 20% of the sales, 30% of the sales, we can go with full electric. But when we need to go to 50, 60, 70, closer to 80, it's starting to be really hard, and then plug-in hybrids starting to make sense.
All right, ma'am. I'll talk to you later.
Gracias.